These are the 13 Variance Masterclass videos. We start with an introduction which just gives an overview of the masterclass itself and introduces you to the elements of the family tree, which is an important part of having a good approach to variances, and also introduces this concept of fixing or controlling other elements. And then we drill down into the mix and yield and mix and quantity variances. We look at how we address narrative questions for mix and yield and mix and quantity. That includes some spider diagrams. I've built some spider diagrams from each of those, and I'll give you copies of those. And then once we've done the narrative part, we go into the calculations. So we look at the mix and yield and mix and quantity calculations. This is the approach to calculations. We identify the easy, quick techniques to do the calculations. And then we go through some calculations. We do some section A questions. I'll come back to the supplemental video in a minute. We do some section B questions and some section C questions, all focusing on mix and yield and mix and quantity. And what I do on all of those 4 videos, the approach and the section A, B and C, we use a single technique that can be used for all mix and yield and all mix and quantity calculations. Just one approach to learn can be applied to all. However, there are other approaches to yield calculations, and so there's video 4.1, which is a supplemental video. Most students probably wouldn't benefit from watching this. This is really for people who are seeking a prize. And it gives different approaches to yield calculations, which save a little bit of time. I say leave this until you've covered all parts of the syllabus, until you're really confident across PM as a whole. Then there's a marginal gain you can get from this additional approach. And then we move on to planning and operational, and again we deep dive into the narrative aspect of planning and operational. We look at the planning and operational calculation approach, and there are just 2 that we need to learn depending on what part of the family tree the variance falls under, and then we show how we can use that in section A, a section B and a section C video. And then finally there's a separate video for market size and market share. Although market size and market share is a sales planning and operational variance, the questions are often set up in a slightly different way, so it's worth taking a customized approach to market size and market share. You can swap these round. So you can do video 1, the overall introduction, and then you can leave all of the mix and yields and go on to video 7 and do planning and operational, work through those, including market size and market share, and then come back and do mix and yields, so do videos 2, 3, 4, 5 and 6. Doesn't matter, you can do them in either order. That's how the Variance Masterclass works. What follows now is the Masterclass, the introduction video, a full version of the video, so you get to see what's on offer. Welcome to this PM Variance Masterclass. You're probably feeling a little bit like this person in the picture on the left. What we're hoping to do is to move you away from that to much more like this person who has mastered variances and has got a position of peace and tranquility. My recommendation as you go through these videos is don't try and do them all in one go. Don't do them back to back. I've separated them out for a reason, because I think snippets of information followed by a break allow your brain to assimilate that information before moving on. I think if you just try and sprint through all of them, you'll probably end up not achieving this peace and tranquility that we see on the screen. Obviously you can come back and rewind and speed them up, slow them down, whatever works for you is a tool for you to try and master variances. So if I'm a management accountant, I don't really look like this person on the right, but let's say I go in on Monday morning to my boss's office and I've got the quarterly results, and the boss says to me, "How did we do?" And I say, "We made 350,000 profit this quarter." And the boss says, "But we expected to make 500,000. What went wrong? Why didn't we make 500,000? What do I say? How do I answer that question? That's where variances come in. Variances give answers how we drill down through the revenue, through the costs of running the business in that quarter or that period. And then instead of just saying we're 150,000 short on the profit we expected, we can say a reason why or reasons why. Then as an organization, we can look at those reasons. What is it that's caused that variance? And then do something about it. I hope no bosses are really like this. What we'll do next is we'll just take a look at how variances are examined across were undoubtedly the three most important and interesting parts of the ACCA syllabus: management accounting, performance management, and advanced performance management. Some say I'm a bit biased, but I think they're wrong. Of course, these are the most important ones. So let's start with a big picture view. If we think about calculations, at MA level, there are more calculations. I think they're a bit more complicated. And as you go through PM and into APM, the calculations get fewer and a bit simpler. But the application aspect changes the other way around. At MA, there's very little application. At PM, there's more application. And at the APM level, the focus is really on application. So that's how the transition occurs across the three management accounting areas. And I've done a bit of research, just tried to collate some data at the PM level on what typically happens in a paper. When we look at variances, something like 60 to 65% of the variance questions in PM papers is calculation based, and 35 to 40% is application. It obviously varies from exam to exam, but that's roughly the split between calculations and application. Why do I think this is important? A lot of students focus on the calculations, and obviously they're an important part. They're the majority of the marks normally, but they do that at the expense of the application, and the application marks are normally easier. Don't neglect the application. Sometimes, often, it's better to focus on the application first, get those easier marks, and then go back and do some calculations. Let's say it's a 10-mark question, 4 of the marks for application. If you get 3 of those, then you actually only need 2 out of the 6 for the calculation in order to get a pass mark. However, if you start on the calculations and you struggle and you use up all of your time so you don't get to the application, then you'll probably get a lower mark than had you done the application first. If you're more confident with variance calculations, which I do hope you will be by the end of this, then maybe the calculations followed by application is absolutely fine. But if you still struggle with variances, then please think about this approach rather than calculations first. The syllabus tells us what's expected, so let's have a look at what the PM syllabus tells us we need to do when it comes to variances. It tells us we need to calculate, we need to identify the cause of, and we need to explain. And for each of those, calculate, identify, and explain, we need to do that for materials mix and material yield variances, sales mix and sales quantity variances, sales planning and sales operational variances, materials planning and materials operational variances, and labour planning and labour operational variances. That means there's 10 variances that are specifically mentioned and 3 actions: calculate, identify, explain. So that's 30 different things we could be asked just at this bit of the syllabus area. However, there is such an overlap between the mix and yield variances and the mix and quantity variances that we can apply the same principles to them almost completely. So those top 2 group together, and then for planning and operational, for sales, material and labour, materials and labour are pretty much identical. Sales is very similar with just a slight tweak again, so we can group these bottom 3. So although we have 30 combinations, because of this grouping, the actual things we need to learn are a lot less. Explain a variance. If you can explain a materials mix and yield variance, you should be able to explain a sales mix and quantity variance, because they're more or less identical in approach, with that one twist that we'll get onto. Likewise, if you can explain a sales planning and a sales operational variance, you should be able to explain a materials planning and a materials operational variance, because once again, they're more or less exactly the same. So our 30 combination is actually much smaller in reality. Likewise, if you can identify the cause of a sales mix variance, you can probably also identify the cause of a materials mix variance. We can apply the same process, the same thinking in order to answer those questions. And finally, if you can calculate a materials mix and materials yield variance, you should be able to do a sales mix and a sales quantity variance, and so on. The one difference we need to be careful of when we're talking about sales is we need to make sure we are applying the contribution or the profit and making sure we're applying the correct one. And we'll come on to that as we go through this masterclass. And just to add a slight twist, The sales planning and sales operational variances have another name, market size and market share. You can use the terms interchangeably, it's saying the same thing, it's just a different name for the same thing. What else does the syllabus tell us? It tells us with materials mix and yield variances, we need to be able to explain why there are issues involved when we change mix or when we change yield. And those are things related to quality, to cost and to performance management. Also with materials mix and yield, we need to identify and explain the relationship with the material usage variance. The material usage variance was part of the MA syllabus. We need to be able to explain how mix and yield links with material usage. And we need to be able to explain how sales mix and yield variances, which are actually called mix and quantity variances, we need to identify and explain the relationship with the sales volume variance. I often call it a sales yield variance. It's the same thing. The syllabus calls it quantity. I like calling it the same because then it's obvious we're doing the same sort of calculation. And as you can probably see, these two that I've changed to yellow are pretty much the same thing, just its materials are swapped out with sales. So how does this masterclass approach? What I do is I flip it around. We spend some time explaining, making sure we can answer that bit of the syllabus. Then we spend some time identifying the causes of, i.e. taking that from the syllabus, and then identifying the wider issues. And we also spend some time identifying and explaining the relationship. And of course, we spend some time doing the calculations. I leave the calculations to the end for two reasons. One is I think it's easier to get all of these narrative marks, so we do that first. If you can do the top four, you'll find the calculations a lot easier. So when I was speaking to my angry boss earlier and he asked why the profit was lower, what I needed, the tool I needed is this. This would have helped me no end, wouldn't it? If I had this family tree of variances, I could have explained it all. And hopefully you look at this and variances now are clear. How can you go wrong if you've got this? Of course, I'm jesting. This is the family tree. This is how all of the variances link together. You see we've got profit on the top line, which was the problem that I reported to the boss. But what is it? Which of these variances or which of these elements of each of these variances has caused that? I would not suggest trying to understand this family tree in one go. Let's take a look at it in a more practical approach. Profit is what a profit-making organisation is trying to seek and achieve, and we use that as the top of the family tree. And under those I've got the 5 elements: sales, and then the 4 outgoings: material, labour, variable overheads and fixed overheads. So we've got 4 sources of cost there and 1 source of income. Hopefully this has brought forward knowledge from the MA syllabus, and hopefully this is too. On each of these 5 elements, they all have an aspect that is related to price. You'll look on the left of each of these branches of the family tree. We've got sales price variance, material price variance, labour rate variance, variable overhead expenditure variance, fixed overhead expenditure variance. And these are the monetary elements, be it dollars, pounds, rupees. All of these sit on this left-hand side of the family tree. And equally, they all have some volume or efficiency-based split. So on the right of this branch, we've got the sales volume variance, the material usage variance, and then labour and variable overhead efficiency variances, and fixed overhead volume variance. All of these are related to how much is happening. So we've got price on the left and we've got some sort of volume measure on the right. And in MA, there were a couple of others. There was an idle time variance that sat under labour, and the fixed overhead volume variance could be split into capacity and efficiency. These MA type elements can come up in PM, but on the whole, it would be quite unusual and rare to see these. So because of that, I don't really focus on them in this masterclass. I focus on the things that are more likely to come up, because that's the low-hanging fruit. That's where you're going to get most of your marks. If you get through all of this masterclass and you're really confident and you're looking to get a prize in the exam, then you should probably do a little bit more work on how performance management could be applied to these things. You're probably not going to get a question on it. And if we did, it would be a small number of marks, I'm sure. So up to this point, we really haven't touched on specifics on the PM syllabus. Now we'll start looking at what the PM syllabus wants. And you see it splits the volume, the sales volume, into a mix and a quantity variance. and it splits the material usage into a mix and yield variance. As I've said already, they are both mix and yield variances. It's just there's a slight different naming. There are others that are not mentioned in the syllabus, but they have come up in the past. It means they could come up again. I would recommend not panicking if you see one of these other ones, because they follow the same pattern and the same process as the ones we're going to look at. And the main one here is labour, mix and yield. It's exactly the same sort of process that we're going to follow for material. Equally, there could be a mix and yield efficiency variance on variable overheads, but generally variable overheads, if it's done on a labour rate basis, follows the labour stages. So if you've learned it for labour, you should be able to apply it for variable overhead. This is exactly the same family tree I showed you in the previous slide, except hopefully by building it step by step as we've just done, it makes more sense. We will revisit this again and again, but what we'll do is zoom in onto the area where it's useful. And by that, I mean we'll eliminate all the things we're not going to be looking at and just focus on the bits we are. So first we're looking at mix and yield variances. So it's these branches of the family tree: sales through to volume to mix and quantity, material through to usage down to mix and yield. As I just said, you could get a labour one, you could get a variable overhead one, but let's focus on these because the process is the same. And these are the ones that are mentioned in the syllabus. There are also planning and operational variances, but they're completely different. We use a completely different approach, and you should definitely look at them as separate topic areas. In the same way we'd use a hammer to bang in a nail and a screwdriver to screw in a screw, we use different approaches for planning and operation compared to mix and yield. But let's take a look at the family tree of planning and operational. And these are the elements that are likely to come up. So you can have planning and operational variances sitting under each of these 6 elements at the bottom of each branch. So you can have a price planning and operational when you're looking at sales. You can have a volume planning and operational. Under material, you can have a price planning and operational and a usage planning and operational. And under labour, a rates planning and operational and an efficiency planning and operational. What planning and operational does is to separate out poor or incorrect budgeting so that we can focus on operational performance. I'm often asked, can you get a planning and operational sales or planning and operational mix variance? The simple answer is no. Sales and mix variances are operational by definition. It's also possible you could get idle time planning operational, variable overhead planning operational, but once again, it's unlikely. Let's focus on the low-hanging fruit, the things that are mentioned in the syllabus, which are these. If we do get one of those curveballs, as long as you've understood these, you should be able to apply it to any of those other questions. This is the last part of this video, and I want to introduce this concept that I call controls or fixes. And before we get down into the detail of how we do variances, a really key aspect to understand is a lot of the steps we need in order to do a variance calculation is to create these controls, these fixes that I'm going to talk about. Let's look again at our family tree. There are 27 different variances on there. And behind each variance sits some variables, some things that can change. So there are probably hundreds of variables that could change and could impact on some of these variances. And that's why we can't just take something like profit and stop there. That's why we need to understand which of those variables are causing something to be better or worse than we expected. And the way we do that is we have to control all of those other variables, or better, I think, to think we have to act as if we have controlled all those other variables. So when we're drilling down into one of those variances, we work on the assumption that everything else in this whole process has performed as expected, and the focus then is what is the impact of those relevant variables which are relevant to that variance we're looking at. It's also done outside of variances. If you think of things like drug research, they don't just give drugs to people and then measure the outcome. They take other factors into account. So things like a person's weight, do they smoke or not? Do they have other illnesses? And they look at the impact of the drug on people by controlling those other variables. And that's the way they can work out the efficacy of different drugs, despite the fact that there are these variables. In our example, when I had to tell the boss that profit was down, was that because our sales were down? Let's say sales were down, but were they 100% to blame for that profit loss? What if material costs were higher at the same time? We've got two things going on. What if our workforce was less productive for that quarter? We can't blame sales if those other two things are going on. Maybe we can blame sales a bit, but we need to apportion blame or responsibility in the right place. And what if it was sales down? What does that mean? Does that mean I sold less items than I'd normally do? And that would be a volume variance. Or did we charge less per item? Then that would be a price variance. So again, we need to understand all of these elements in order to paint the full picture. So why do I think variances are hard? I think there's two key reasons. One is there's lots of information. And the second one is, as I'm trying to get across here, people struggle to decide what we need to fix, what we need to control in order to make that fair comparison. And I'll introduce in a bit more detail later on. Part of the approach is first, what information do we need? And then how do we control and fix everything else? And if you can do those two things, identify what information you need and control all of the other elements, you'll probably be getting 95% success on your calculations and probably 60 to 70% on the narrative marks. So it's a really important part. Well done. Hopefully variances and understanding feels a bit more achievable, a bit more in your grasp. As I said earlier, don't just move on to the next video, take a break, maybe go and get some fresh air, do some star jumps, do something else, get your blood pumping around, get re-energized, refocused before you move on to the next one. Thanks very much. I really hope you found that introductory video to my Variance Masterclass useful. If you come to my page here on fmelearnonline.com/Richard_Guyver, this is where my course is, where you can apply for my course. There's 3 packages to choose from. Got the Platinum package, which is everything. So you get the tuition, you get the revision course, and you get the marked mock. The Revision Plus, you get access to my revision course and the marked mock. And the Nearly There revision course has everything in the revision course, plus some additional elements just for people who have got 40% or higher in PM exam, just to help customize their approach to going through the revision course. You see there's lots of elements here. With all of them you get WhatsApp support, and of course all 3 of them include access to that Variance Masterclass, not just the introductory video, but the whole series of videos. Hope to see you soon. Thanks very much.